Good morning, guys. It is 11:13 a.m. Central Standard Time. As usual, my name is Chris Salora, founder of Simple Renko Trading. Got a lot to cover in this video, so just want to kind of dive right in. So as you guys can see, we have been moving in this somewhat brutal range. I mean, if you're an investor or a trader, trading what kind of investing can you do in a range? Like you really want a trending market, to get a good return. So if we're up and then we're down, and we're up and we're down, it's no fun. If you're trading, it's great. And there are ways to trade in a range like this, and I'll give you some tips and tricks on what to do with that. But here we are. This is Bitcoin's range. Take a peek at Ethereum's range. There's Ethereum's, and you can see like we've had these moments of glory where we get 5 up days, and then we get this nasty red day right in an area where we sell off, and it's been for traders and investors, it's been somewhat brutal. But I've taken a couple opportunities in the range and had some success, so it is possible. It is very possible to um, oh my goodness, what is this? Oh, I forgot my. All right, well, let's just look at BLX right now because we're still on log charts. And I want to take a look at this logarithmic regression. I want to take just a quick minute and remind everyone where we are on the logarithmic regression. Okay, so as you guys can see, this is BLX. Okay, this is BLX, and as you guys can see, we are currently trading in this upper red band. This is your high risk band. This is when within this band, um, investing in cryptos and hoping that we're going to make an all-time high is riskier. Okay, it's riskier to do it right now. Okay, that's what this is suggesting. And every time you can see we've come into this upper red band, we've consequently had a pretty decent sell-off. Okay, so there's 2017. I think if you keep going back, we've got 2014 here. My computer is just churning through all these candles. Okay, so as you guys can see, when we get into this upper red band, it's just a lot more risky to buy into the crypto market and expect us to push higher. This is basically showing you the law of diminishing returns. I'm not a mathematician, so I won't go in too much into detail with that. I'll just stick to technical analysis, which is my area of expertise. And I just want to remind you guys, we are in this upper band. So keep in the back of your mind, if you're trading or investing, trading like kind of holding positions for a day or two or like a week or something like that, just keep this in the back of your mind. We are in an area where prices are less likely to push higher to all-time highs. So just wanted to throw that on the chart and show you. Let's get rid of this now. Let's go back to Bitcoin and let's take a look at this range. And I want to give you guys some just some tricks that you can use to help you in trading in a range like this. So the first thing, if you guys have been following for a while, or at least like the last month or two, like since we've been in this range, I really started reporting on Bitcoin. I kind of went silent for a little while on TradingView, but I've been reporting a lot since we've gotten down in this range, just wanting to give people, um, just kind of wanting to share my knowledge. And I'm just going to keep sharing my knowledge on TradingView. I don't anticipate disappearing again anytime soon. So anyway, as you can see, this is the range that we've been in. Now, here's the first thing that you can do when we're trading in a range. You want to look at these significant areas where the averages cross over, okay? So when we see this, okay, when we see a significant crossover like this in the price, you know, during these days here when we're coming back down, we can look for an area to jump in long. And there was an opportunity that I took. This is actually, it was on June 20th. This little green candle right in here, I actually had a long trade and I caught that. And it was the one green day that we put in at the time after a 1, 2, 3, 4, 5, 6 day run. Okay, not trying to puff myself up, but it's possible to make money and trade in a range. So that the first thing is look at your averages. So right now, where we are at, look at these averages. Okay, Now you might say, well, look, that looks bullish, okay, because we've got this. This is the Hull average. This is the Hull 10 average. This is the McKinley 10. This is the McKinley dynamic. Both of them are a 10-period average. And I'll say that when we cross over to the upside like this, we're bullish, so we can look for bullish opportunities. But look at where we are right now. So you might look at this and say, hey, look at this, Chris. This is a bullish. There's a bullish crossover right there. But as you guys can see how weak it crossed over, and now it's almost looking like it's going to cross back down. This is not a great time to look for long trades on Bitcoin. Now, I'll be the first person to say that at times on lower time frames, I have looked at long opportunities. In hindsight, might not have been the best opportunity. Okay, it might not have been the best time. I had one losing trade on Ethereum a couple days ago. Big deal, whatever. It's okay to take stabs. Just do not throw like 5% of your account. Like throw like a quarter of 1% or something. Just take like a nibble. Take like 1% of your account. Measure your risk. It's okay. You're gonna to take opportunities and they don't work. But honestly, in hindsight, maybe not a great time to think long. Okay. But another thing, so the first thing is look at your averages on the higher time frame. On the higher time frame, are your averages saying that you can get a little bullish, or are they saying that you should remain bearish, or are they saying you should just stay out? Um, if these averages are kind of just touching and not really doing anything, if this average, this orange average, is just kind of flat, just stay out. I mean, that's always an opportunity too. It's just to not do anything and wait for a breakout, and for price to really show its teeth. Okay. So anyway, that's another possibility. So the first thing is look at your averages. Look at your averages. Number one, look at your averages. Number two, go down into a intermediate time frame like a 4-hour chart or something. And I really love the money flow. I've fallen in love with the money flow the last couple of months. This money flow has volume built in. Okay, and as you guys can see, this is indicating even though we have moved down here, we've made a pretty significant move down. Even though we've made a significant move down, this money flow is at one time trading at a value of 20, which is pretty oversold, indicating that buyers might step back in. So here's a way that you can use this indicator to say, hey, look, this is actually indicating that I might see a bullish bounce. So when this indicator is trading here down at 20, when this indicator is trading down at 20, it should be no surprise when we start to see bulls come in like this and start to move the price higher. And also, if you look at the averages here, it should be no surprise that these averages are starting to converge, to the upside. We'll have to wait and see if they cross over, to see what kind of, bullish momentum there is. But look, we've got the money flow moving up. We hit 20, which is 20, and a value of 20 and a value of 10 is pretty oversold. So if it's getting down to 20 or even 10, that's pretty oversold. You can usually expect a reaction from bulls. And if you check this out too, so the second thing is look at an indicator like the money flow. I love the money flow. I've fallen in love with it. So if this is indicating oversold, well then it means that the bulls might step in. So even though we're in a broader range, when this indicator is showing us that we're oversold or overbought, it might be indicating, hey, the bulls are likely to step in. Check this out here. So when price made this high, look at our money flow. Our money flow was again at 80 on the other side. In between 80 and 90 is very overbought. Excuse me. It's very overbought. So it was overbought right here. And I could have told you with a good degree of confidence that this little sell-off here was more likely to happen. Okay. So honestly, you guys, from here, even though again we're trading in a range, it's a weird, awkward range. Even though we're trading in a range, I can tell you that there's more of a likelihood, just because the MFI is so oversold right now, there's more of a likelihood that we'll be trading in this area in the coming, days or whatever to come. Okay. So that's another thing that you can do in a range. Just look at these indicators like the money flow. Let's just flick to a completely different currency, and I'll show you again how it works here. So here's Ethereum. I took a, whoa, okay, that's our Let's get our rectangle out. As you guys can see, I took a trade down here that was stopped out. Okay, no big deal. Okay, as you can see, I took a trade down there that was stopped out. Now I should not have taken that trade. I should not have taken that trade because if I was paying attention to my indicator, which I wasn't for this one, I would have seen, oh, price made a higher high here. Okay, price made a higher high. Let's get in the Wayback Machine real quick just so we can play this out. So price made a higher high here, and check out what my indicator is indicating. It's giving me some bearish divergence where I'm making a lower high. So I should not have gone long down in this region. Again, because of my indicator. This indicator was at 80. When this peak was made, it was at 80. That's oversold right there. Okay? And then without fail, we do sell off. You know, we get the move down here. Okay, we get this move down. And then, oops, excuse me, guys. We get that move down. We get the reactive move up. And then even though we made a higher high on the price, we're making a lower high on the indicator. That is a very bearish signal. So I shouldn't have taken a long there. And then lo and behold, we get stopped out. But now, as you guys can see, oh my goodness, come on, Chris. Lo and behold, as you guys can see, now we're approaching the lower bounds of this MFI indicator. I mean, we're at just a little under 40. What are we at right now? About 33, okay? So what I can actually do, you guys, is I can actually look at opportunities down in here. So you can see here's an area of the market where we saw a nice lift in price. I actually do have another area that I'm looking for just below here on a 30-minute chart. But what I can do now is say, okay, well, we're heading towards oversold territory. So if this market wants to just kind of start trending down now for the next day or two, okay, I can, making a move like this, I can start looking at this area down here. I already know that there's buyers down there because look at, oh my goodness, look at that nice green candle there. So by the time we get down here, my money flow should be somewhere down here, or possibly it'll be like in the same area. So I'll have a low price, but the indicator will be a little bit higher. So anyway, that's like trading 401 for some people. So my apologies if that's over a lot of people's heads. But basically, that is the two things that you can do to help you out in navigating a range are using averages and average crossovers. Okay, if your averages are above, you can look for bullish opportunities. If your average is below, you look for bearish opportunities. You look for opportunities to sell. And then the other thing is on an intermediate time frame, like a 4-hour, maybe a 6-hour, whatever you want. It all depends on how fast you want to go. But on an intermediate chart, on an intermediate time frame, keep in mind where these oversold and overbought boundaries are, and then you can trade positions accordingly when we're in those places. So that's that. I hope that was helpful. This is really less of a update on Bitcoin and more of like an education. But actually, you know what? We'll just throw a little quick update here. Um, why not? We'll just cover every bird with every stone. I don't even know if that makes sense. But anyway, so for your Bitcoin update, yeah, bulls are looking for bulls to step in here. So no surprise that as soon as we touch this line, we see a little bit of bullish action. Okay. So really looking for the bulls. If you're bullish Bitcoin, you really want the bulls to hold up this area, and you want to see prices continue up there to test the top of the range. That's what you would want if you're bullish. Okay. We might even get a little dig in here. It's very possible to get a little dig in here and then get another push. It's very possible for us to just go all the way down, or even put in a new low and then head higher. But basically, if you're bullish, you really want to see the bulls hold up this area. For those of you guys who are bearish right now, not a great time to think about selling. I think that the sellers aren't going to come in until up here, around up here, or possibly the very top of the range up here. Okay, that would be where I would want to see those sellers stepping in. So right now, really not a great time to think too bearish on Bitcoin, just because technically our averages are giving us a bullish signal. We've got the hull above the McGinley. So I think let's not write the bulls off too soon, okay? Because we can still kind of be putting in a little bottom of this range and testing to go to the top. So that's that. And also on the 4-hour, I'm looking at, oh, excuse me. I'm saying that because look at the 4. On the 4, let's not write these bulls off too soon because the price is right now in their territory. It's in the lower bounds of this MFI. So let's not write them off too much. The indicator below is the Chaikin money flow, and I'm not really using that too much because it's not very great in a ranging market. So in case you guys were wondering about that, that's that. So yeah, there's your market right there. You want to see the bulls kind of keeping the price around 33. You don't want to see prices, breaking through this range. At least I don't. I want the bulls to keep up this area, possibly even push it up from where it is. Sellers, let's not really look for them until we get higher on the range. But yeah, that's what I'm looking at. If this is helpful, check out the Patreon. It's patreon.com/simplerenko trading. Thank you for your support. Thanks for following, and I will see you guys on the next video. Ciao.